What's up you guys? Welcome back to the Average Joe Investor channel. In this video, we are looking at the top high-yielding dividend stocks for October 2021. We've really dealt with a lot of volatility here in the past few days. Maybe some of your positions have lost a lot of value. The great thing about dividend stocks is if you pick quality dividend stocks, you don't have to worry about fluctuations in the markets. You don't have to worry about if your company stock price goes down at all. It's not that big of a deal. That is, if you pick quality dividend stocks. So in this video, guys, we're going to look at my monthly dividend stock spreadsheet, which is available in my Patreon community. We'll talk more about that in a bit. We're going to look at the top high yield dividend stocks that are available right now based on their current yields, based on current actual prices. And of course, we will narrow down our list of dividend stocks based on the criteria that we set for quality dividend stocks. All right, guys, we got a lot of dividend stocks. If we go and grab all these, we've got, how many we got to sift through to find really high quality dividend stocks that have high yields? 631. Let's go over here and take a look at payout ratio based on free cash flow right here. Let's go ahead and filter out here. Again, payout ratio based on free cash flow measures what the dividends are paid every year compared to the actual free cash flow for the business. A lot of people use payout ratios based on net income. I think it's better to utilize that payout ratio based on free cash flow because it's more based on cash than on an accounting metric, net income. So we're gonna go in here, we're gonna filter only for green and yellow. So green is between 0 and 75%, yellow is between 75 and 85%. Anything above 85% is generally not gonna be very safe unless it's super consistent and has a long track record. Otherwise, we would wanna avoid any payout ratios that are based on negative free cash flow. All right, so we went ahead and filtered by that metric. And let's go ahead and see, we went from 631 and we're down to 521. So that didn't do too much for us. Let's go ahead and go back up to the top here. Let's go ahead and work with dividend yields that are at least 3%. We don't want to even look at 1 and 2%. That's not really aligning with our metrics here. So we'll go to our number filters here. We'll go greater than or equal to, and we'll say 2.99% and higher. All right, from 531, now we're down to, what do we got here? Oh, wow, that really narrowed things down here, down to 109. All right, let's take a look at our growth rates here. We're gonna have a little bit of grace here for the 1 year growth rate because that was based on COVID, and that changed a lot of business plans for many companies. So we're gonna go and give them some grace here. And we're going to filter by the 3-year dividend growth rate, and we're going to filter by the 5-year dividend growth rate. We're going to filter by color green, which means at least 4%. I choose 4% here because I want to make sure that my dividend growth rate always exceeds the long-term inflation rate. I want to avoid things that grow at a lower rate than inflation because that's going to eat up any dividend increases in the future. So now we went from 109 down to 104. That didn't change too much for us. So now we're going to go ahead and we're going to filter by largest smallest here to make sure we've got the top yields right here. And you'll also notice this dividend tier and this dividend streak here. This is the number of consecutive years of increasing dividends. Challengers are between 5 and 10 years, contenders 10 to 24 and a half or 25 years, and then a champion is going to be 25 years and higher. So if we're looking strictly at just the top highest yielding dividend stocks here, let's go ahead and unfilter based on ticker, symbol, and company. Let's take a look at just the top 10 here, the top highest yielding dividend stocks here. All right, so here are the top ones here. We've got Getty Realty Corporation, MGM Growth, Star Group, Hennessy Advisors, BCE Inc., Northwest Bankshares, Arbor Realty Trust, Westlake Chemical Partners, Delic Logistics, and MPLX Limited Partnership. For full awareness here, I own in my own portfolio Westlake Chemical, Arbor Realty, Northwest Bankshares, and I also own Star Group LP. Within these top 10 dividend stocks here, you can see that we've got consistent dividend growth here. Some of these growth rates are north of 10%. We've got 16% long-term here for Arbor Realty, 9% this past year during COVID. Those are great numbers. Energy still causes me a little bit of concern here, so I'm not jumping at MPLX and Delic Logistics, though I do want to show with you over here to the far right. In addition to having the payout ratio based on free cash flow right here, we also have the trend. This is in the monthly stock spreadsheet that's available to every member of my Patreon community, which I should mention to you guys, I did a trial for a while. I had only a $10 per month tier. I opened back up the $5 per month tier for those of you that just want access to the monthly dividend stock spreadsheet and want access to my monthly spreadsheets. So that's available to you guys. There's a link in the description below of this video. So in addition to this payout ratio based on the trailing 12 months based on free cash flow, we also have trending over here. Let me scroll farther further over here. So we've got free cash flow per share for 2017, 2018, 2019, 2020, and trailing 12 months here. So this can give you a gauge for how volatile the free cash flow is. If it's up and down and up and down, that might not have as much stability as one that's consistent. You can see it right here. This company right here, Westlake Chemical, look at that free cash flow. It is consistent. We've got 7, 14, 11, 11, 11. Really strong there. Whereas you've got some, you got 41, then -6, then 5, then 1, then 5. Although we've got pretty consistent free cash flow per share right over here for MPLX at the top one here, still, I still get a little bit concerned about really ultra high energy stocks right now. Here's another one here, Northwest Bank shares at 1.66, 1.4, 1.38, 1.11, 1.21. Very consistent right here. So in addition to looking at what the most trailing 12 months are, you can also look at the trending back here for free cash flow per share if you're interested. So in addition to seeing the most recent trailing 12 months, you can also see the trending for free cash flow per share, which tells you more about the stability of the stock. Let's go ahead and get rid of this here for a second. Let's say that we are just a little bit concerned about stability. Let's say we only want to look at dividend stocks that have just a bit more consistently. We only want to look at contenders. We don't want to look at dividend challengers at all. So we can come in here and say filter by color. We only want to look at contenders, not challengers, not champions, just contenders. So now we've got some other stocks here that are all, we've got some here that are all yielding over 4%. Let's take a look at which ones these are. So we do have some repeat companies here. We've got Northwest Bank shares. We've also got Star Group, 2 that I own. Lyondell-based Industries, Ames National Corporation, PetMed Express, one that's in my portfolio as well right now, Norwood Financial, Lazard, and Choice One Financial Services. All companies that have been paying dividends for at least 10 consecutive years and raising that dividend every single year. And these all yield over 4% right now. You've also got some pretty consistent growth rates here, 7.5, 8.4, 6.9. And if you only wanted to look at Dividend Champions, those companies that have been raising dividends for at least 25 consecutive years, you can filter right here by champions. These are the companies that are yielding at least 3% here. It's a little bit harder to find stronger yields and meet all the criteria. If you're looking for consistent dividend growth rates above 4%, this obviously filtered out some companies that I actually own, such as Altria Group, which doesn't have quite the growth rate history that some of these other companies do. If we were looking at Dividend Champions, let's go ahead and reveal these companies right here. Walgreens Boots Alliance, another one in my portfolio currently. Community Trust Bancorp, Franklin Resources, First of Long Island, another one in my portfolio. 3M Company, and UGI Corporation, which used to be in my portfolio. Again, if you guys have any interest in checking out this spreadsheet, you have to become a member of the Patreon community. There's a lot of great data in there, helpful to new investors, those experienced investors that would just like quicker access to certain elements of data for their dividend stocks. Again, there's a link in the description below. I have both a $5 per month tier, which I've reopened back up, and a $10 per month tier as well. All the details are in there. There's a link in the description below. Make sure to check out the next couple of videos, guys. If you're not a subscriber, you want to make sure to hit that red subscribe button to join the Average Joe Investor community. And we're going to be talking more about whether or not we should be doing a DRIP program or a reinvestment of our dividends right back into the same stock, or would it make more sense to just collect all those dividends every month and then allocate those dividends back into specific companies that make the most sense? I'm going to let you know what I recently decided to do in the next video. And then following that, we're going to really break down how do we actually build a dividend income portfolio that can actually really explode with growth and income over time. We're going to break down the key metrics you need to have in your dividend portfolio, and then follow up to that video is going to be how do we build that portfolio? Getting hands-on, getting our hands dirty. Make sure to leave your 2 cents in the comments below. I always read the comments, guys. I take your feedback. I take your video suggestions. So please leave your 2 cents in the comments below. That's all I got for you guys in this video. Have a great rest of your day. And please continue to stay healthy, both physically and financially. Have a good one.